So how exactly do tax brackets work? Let's say you're in the 24% tax bracket. Does that mean you're losing 24% of every dollar you've earned to taxes? No, it doesn't. Let's talk about why next. Hey, this is Mel Stubbs. I'm a financial planner at Christy Capital Management. We're helping federal employees plan for a better retirement. If you need individualized help, go to christycapital.com, click Talk to an Advisor. So the way our tax system works is that we have a progressive tax system, where as your income goes up, the tax rate that you pay goes up. Whatever income tax bracket you land on does not mean that you pay that percentage on everything. Let's look at a tax bracket for someone who is single. The 10% bracket in 2024 goes from $0 to $11,600 of income. You will pay 10% tax on that amount. The next bracket is 12%, and that goes from $11,601 to $47,150. Anything above that $11,601, you'll start paying 12% on this amount of money. You can imagine these as buckets that you're filling up with water, but instead of water, you're filling it up with income. The first bucket is 10%, and you'll pay that amount on the first $11,600. When it overflows that bucket, it starts flowing into the 12% bucket, where you'll start paying 12% on anything above $11,601. So this is where the difference in your marginal tax rate and your effective tax rate come in. Your marginal tax rate is the tax bracket that you land in. If you make $90,000 a year and you're single, you will be in the 22% marginal bracket. That bracket goes from around $47,000 to around $100,000. If you are $90,000 of income in a year, your marginal tax rate would be 22%. That is the rate that you will pay on your last dollar of income. If you end up earning one more dollar, you'll pay your marginal tax rate on that $1. Now, the effective tax rate is the actual percentage of your gross income you pay in taxes. Remember, you're paying 22% on some of the money, but you're also paying 12% on some of the money. You're also paying 10% on some of the money. And so when you average out the person making $90,000, they may be in the 12% marginal tax rate, but the effective tax rate would be 13%. As you can see on this marginal tax rate calculator for 2024, with $90,000 of income, being single, and no other dependents, is showing that your tax bracket is 22%, that your marginal rate is 22%, but the average tax is around 13% of your total income. Now, where this can be helpful is, let's say you want to do some Roth converting and take some traditional money and move it to Roth. What matters is your marginal tax rate. What tax bracket are you currently in? Because if you do a conversion, that next dollar of income will be taxed at your marginal rate, not your effective rate. So we do more planning based on marginal tax rate. You only know your effective tax rate at the end when you've actually done your tax return. When you're doing proactive planning, you have to do it based on your marginal tax rate. Also keep in mind that you're only paying taxes on your taxable income. So whatever your salary is, you do get to reduce that by your traditional TSP contributions, by your FEHB payments. And for a lot of you, you'll use the standard deduction. And so if you're able to itemize and get a larger deduction, you can do that. So after all the write-offs and exclusions and deductions, you come down to your taxable income, which is going to be line 15 on your tax return. That will give you the number where you can look to see what marginal tax bracket you're in. I hope you enjoyed learning about how tax brackets work. Keep in mind that the marginal tax bracket is where you do your planning. So if you need some planning and you want help with that, go to christycapital.com, click Talk to an Advisor. If you want to know if it's too late to do Roth conversions for you, check out this video right here. My name is Mel Stubbs. Please let us know how we can help you. We got webinars at christycapital.com/webinar, so sign up for our next one. Good talking to you.